Want to turn our attention to what's going to happen in this economy, and is there opportunity for investors? To help us answer these questions, Peter Tchir, the Academy Securities head of macro strategy, is joining us now. And Peter, I just want to ask you, I know that you are taking risk right now. You're buying the dip, but this is a consumption-based economy, and those retail sales numbers we got this morning, I mean, clothing stores down 50%, department stores down 20, almost 24%. Why is now the time to buy?
I started buying a couple weeks ago, so I pared some risk back yesterday. I'm putting back on. I think we've got to be a little bit nimble here. But I think the whole conversation really has to shift from the war against the virus to how are we going to reopen? I understand that we've got to be careful in how we reopen. And, 2 weeks ago, anytime anyone talked about reopening, they were really, poo-pooed. Now I think there's at least a dialogue, and these numbers are so bad. I think it's got to wake up politicians and say, hey, we've got to be careful, but at the same time, we can't let the economy get completely trashed.
Hey, Peter, it's Julie here. I'm sure you also saw, though, that Harvard paper report that was out late yesterday that said we could see at least some level of social distancing going through 2022 even. So even if we do reopen, it seems like there is going to be a paradigm shift in how we operate, right? And how many people are allowed to be in public together. So if that's the case, what does that look like from an economic perspective and from a market perspective?
So I think a couple things with that. I think that's a great point. I do not think all the service sector jobs are going to come back. I think we're going to see a little bit of a social distancing. I think we're going to see a regular kind of commute from home or work from home type of philosophy going forward. So some of the service jobs will not come back. We've got to get those that can come back starting. And then really my next theory is that we really have to work on supply chain repatriation and a big infrastructure spending. I think one lesson we've all learned is whether China is a good actor or a bad actor, having so much of your supply chain depend on China, especially for medicine, is not a good idea. So I think we're going to see a real push in the second quarter, third quarter from politicians to bring supply chains back and to build out infrastructure spending. And that's what's going to make up for the lost jobs in the service sector.
I am curious how you feel about the financial sector. I'm looking at the XLF right now. That ETF is down about 4.4% today. Where do you think we go with so much of a backstop from the Federal Reserve when we look at the bank earnings we're already getting?
I think you're actually supposed to be buying XLF. So that's probably one of my favorite sectors right now. It's done very well off the lows. I think it will go back to. One, I think people underestimate how much trading profit can be made. Two, I think the bank balance sheets are going to be fine. My suspicion is that the banks took this opportunity to take a lot more write-downs than are necessary. And if we get any sort of recovery coming into at the end of Q2, start of Q3, I think look for good bank earnings. And they will make money once the refis start kicking in. There's a lot of opportunities for banks. Yield curves are actually somewhat steeper. Credit spreads are slightly wider. I think the punishment on the financial sector as a whole has been too much.
Peter, it's Julia LaRoche. I want to talk about the central bank side of things. You have the Fed stepping into the credit markets, buying up investment grade. I just wonder, because I think a lot of people are kind of scratching their heads at this, is the Fed picking winners and losers here? And what are kind of the pros and cons of these moves we've seen lately?
That's a great question. So I view the Fed as taking two types of activities. One is liquidity providing and one is risk taking. And when I look at markets like the repo market, there were a lot of people who wanted to put on risk but did not have the money to. So there the Fed put in liquidity. I think when we looked at what was going on in the credit markets, the CLO markets, there was no one willing to take risk. So the Fed tried to backstop that. I liked their view that they should buy AAA, CLO, and mortgage products. I also liked when they were buying investment grade 1 to 5 year corporate. That's a very, very safe part of the corporate credit market. There are almost no defaults ever from an investment grade company within 5 years. I'm a little bit nervous that they've started extending into some of the fallen angels and that they're buying some of the ETFs. I would have liked to see them kind of support that anchor really at the front end with money markets, commercial paper, 1 to 5 year. I'm a little bit nervous as they go beyond that. It's going to be something that gets hard to dig out of.
Julie?
I'll chime in because I think we're having a little bit of trouble with Akiko's audio. Peter, I wanted to turn to oil for a second. We had the International Energy Agency this morning saying that basically we've seen almost a decade's worth of oil demand erased because of coronavirus. We just got the weekly inventories numbers out here in the US, and we saw a build of 19.2 million barrels last week because people aren't driving and we're not seeing the demand for oil. So when you look at sort of buying the dip, does that apply to something like oil as well? Because the demand destruction there has been so profound.
Yeah, I think you've got to be very careful because it's still a very high beta sector. But again, we really have to focus on reopening the economy. As you said, no one's flying, no one's driving. As weather warms up, no one's heating their homes. Basically, there's no manufacturing going on. So everything that would be demand of oil has dropped off, and that's what we've got to fix. I mean, OPEC can cut more, OPEC plus can cut more. It's not going to really help anything until we get this demand side back. That's got to be the focus. Is how do we start rebuilding this? It sounds like it's everyone's trying to figure out how to get their auto insurance cut because no one's driving. They've got to fix that.
Peter Tchir, thank you so much for joining us here. Peter Tchir is with the Academy Securities, head of macro strategy. Always good to see you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.